Ladies and gentlemen, good day and welcome to Inspire Films Limited H2 FY24 earnings conference call hosted by Kirin Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Chandni Chande from Kirin Advisors. Thank you, and over to you, ma'am.
Thank you. On the behalf of Kirin Advisors, I welcome you all to the conference call of Inspire Films Limited. From management team, we have Mr. Yash Patnaik, Chairman and Managing Director, Mr. Amit Kumar Sen, Executive Director, Mr. Balchandra Ram Rao Kadam, Chief Financial Officer. Now, I hand over the call to Mr. Yash Patnaik. Over to you, sir.
Hi, good afternoon, ladies and gentlemen. Thank you for joining us today in this Inspire Films Limited inaugural conference call to discuss the financial performance of the second half of the fiscal year 2024. I extend my warm welcome to each one of you, especially considering the milestone of our listing on NSE Emerge platform. Before we delve into the specifics of H2 FY24, let me provide a brief overview of Inspire Films Limited. Since our inception in January 2012, headquartered in Mumbai, we have been driven by relentless passion for creating and crafting immersive storytelling experiences across television and digital platforms. We have established ourselves as a dynamic force in the content creation and production and distribution, with primary focus on Hindi, GEC, television and digital content and regional productions. From project financing to meticulous oversight throughout production and post-production phases, we take pride in our comprehensive role in bringing compelling narratives to the life. At Inspire Films, we operate within 3 distinct business verticals: television, that is Hindi GECs, digital content and platforms, that is OTTs, and regional content. Through our commission content model, we offer bespoke content creation services, ensuring a diverse range of concepts tailored to our clients' needs. Our original content model, branded as Beyond Originals, sees us co-producing shows with Beyond Entertainment Private Limited, positioning us as the creators of valuable intellectual property licensed to various clients for potential significant profits. Additionally, our licensing and distribution model ensures broad accessibility to quality entertainment by distributing popular and award-winning content to broadcasters and media platforms worldwide. Our journey has been marked by major content successes and industry partnerships. With over 35 beloved television shows and web series in our portfolio, we continually push the boundaries of storytelling, captivating audiences with our commitment to excellence and innovation. Partnering with major networks such as Sony Entertainment Television, Jio Cinema, Hotstar, MX Player, Colors, Disney Plus Hotstar, among others, we have solidified our position as a powerhouse in the entertainment industry. Our recent milestones of listing on the NSE Emerge platform in October 2023 further underscores our dedication to growth and impact in the ever-evolving landscape of content creation and distribution. Coming to the highlights on post-listing, we have Mr. Balchandra Kadam, who has joined as in the role of Chief Financial Officer at the BM, effectively from 29th of May 2024. With over 3 decades of experiences as stated in his profile, Mr. Kadam has recently transitioned from consultancy to join our team. His extensive expertise in finance, taxation and law will undoubtedly bolster our operations. We eagerly anticipate his contributions. Number 2, introduction of novel business models focusing on distribution and licensing, resulting in significant business prospect for us. In this period, we have signed multiple contracts, close to 7 projects for various networks and broadcasters. Establishing a collaborative partnership with Kavya Motion Pictures Private Limited, marking a significant milestone for our journey. Secured an agreement for the production of long-term web series with one of the OTT platforms, marking the substantial achievement. While specific details are confidential, it represents a significant step towards the company. Launch of new brand, fresh mint, signaling our commitment to innovation and market diversification. Exciting developments ahead with the immense release of intellectual property on our YouTube channel. Please stay tuned to updates for engaging content. Coming to our financial performances, we reported a total income of 9.14 crore with an impressive EBITDA of 2.91 crore, translating into an EBITDA margin of 31.84%. This indicates our efficient cost management and strong operational performance. Our net profit for this period stood at 1.13 crore, resulting in a net profit margin of 12.36. Looking at the entire year FY24, we reported a total income of 30 crore 44 lakhs. Our EBITDA for FY24 was 5.78 crore, while EBITDA margin of 19%. Our net profit for FY24 stood at 2.57 crore, with a net profit margin of 8.44% and an EPS of 3.07. Overall, we have demonstrated a decent year of growth profitability underpinned by a strong operational efficiency. However, the industry faced significant uncertainties due to merger negotiations amongst major platforms and broadcasters during this period, which delayed many of our greenlit projects, including the television and broadcasting projects, for over 6 months. During this period, we focused on strengthening our project pipeline with both existing and new projects. Now, with the industry stabilizing, we are ready to launch these projects and are confident in our ability to bring all our inventories to the market before the end of the current fiscal year 2024 and 25. The turbulence in the industry is now behind us, and we are emerging a wave of positivity. During the later part of 2024, we secured a significant multi-project licensing agreement with Zee Entertainment Enterprises Limited, subsequently licensing popular IPs to MX Player, a major OTT platform. Additionally, we forged a collaborative partnership with Kavya Motion Pictures for a 3-year endeavor to co-create a diverse range of audiovisual content. The initial 2 quarters of the fiscal year showcased remarkable performance, surpassing both revenue and profitability targets in comparison to the previous fiscal year 2023, 2022 and 23. We are excited to announce a series of new projects across television and OTT platforms, including both new ventures as well as new seasons of our established projects. Recently, we launched our level Fresh Mint, which will be streaming variety of original IPs such as web series, mini-series and shorts on YouTube and various video sharing platforms and social media platforms. This content will be monetized through YouTube, through advertising, sponsorship and syndication and licensing. At Fresh Mint, we are committed to creating a captivating mix of long forms and short form web series and along with quick hit content known as Mint Shorts. Our offering resonates with the dynamic spirit of today's youth, catering to different viewing performances. With India having over 700 million individuals under age of 35, our narrative explore contemporary themes relevant to young people, both urban and rural backgrounds. We aim to inspire, entertain and provoke thoughts, ensuring our stories are relatable and reflective of India's diverse youth. I appreciate your attention, and now I invite you to participate in the question and answer session. We eagerly waiting to address any questions you may have. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The first question is from the line of Varun Agarwal, individual investor. Please go ahead.
Hi, Ajay. Really appreciate your step of organizing the earnings call for the first time. I was looking at the balance sheet. We have loans and advances, short-term and long-term, to the extent of about 5 crores and 9.6 crores. Can I know who are these advances given to?
One second, I'm just checking.
On the assets, we have loans and advances, long-term 5 crores and short-term 9 crores. We must have given this as a part of business as advances to somebody.
I would request Mr. Bala to explain this.
Yes. Hello. Thank you. Can you just, for the sake of just repeat once more so I can address
On the asset side in the balance sheet, we have loans and advances, long-term 5 crores and short-term about 9 crores.
Okay, just a moment. Yeah, just a moment.
Varun, do you have any follow-up question?
No, this is yet to be answered. So meanwhile, while you look at it, I'll ask another question. So we have project work in progress of about 20 crore. So in our business, generally, as in when we produce episodes, we keep billing them on a milestone basis. So how come the project work in progress is about 20 crore, which is yet to be billed?
So we have a very interesting mix of OTT projects and television projects now coming in the next few months. So episode realization happens after you release the episodes. Right. So the working capital goes towards multiple heads, like your one-time cost, which is like content development, salaries, building of assets, whether it's a musical asset, or whether it's a content asset, or physical assets, or graphical assets. So as we are talking, we have mentioned this before. We have around 8 projects in the pipeline, which are in different stages of pre-production, development, and production. So hence the work in progress.
So eventually this 20 crore will get billed as revenue in FY25.
Yes. It will depend on which projects land in that timeline. So when we talk about a television project, at times the project lasts for more than a year. So it lands in 2 parts. One, it could land in the middle of a year and go into the next year. So the realization will happen over a year or 2 or maybe 3 years, depending on how much the project lasts. Because we give a credit period to the platforms and broadcasters.
Okay.
I'm
trying to compare. Yes,
Mr. Bala is ready with the answer for your question.
Yeah. And just to add to that, the work in progress, basically, if you look at our prospectus, we had informed in advance that this is the practice wherein we need to keep building inventory. Like last 6 months, there were no projects, but at the same time, we were investing money into various content creation. And as per the prospectus, we were at the same range, like where we had forecasted that we'll be spending around 20 crore during 23-24 financial year. So that's where basically we are still there. So we are not too far from the number what we had forecasted. So that was on the project inventory side. On the loans and advances, what you mentioned. So that 5 crore was mainly to the intercompany, and out of that, the 4 crore is mainly for the deposit, basically for the premises which we are operating. Inspire is operating at the headquarters, which belongs to the promoter, and so that the deposit is lying with the promoter. So that is mainly towards that, and the rest is like the tax receivable. The input tax credit receivable is around 75 lakhs, and the main and the other intercompany advances with the associate company. So that was for the 5 crore.
Okay.
So and then the 9 crore is again on the inventory side. So that is basically this is separate from what we had reported as the project inventory. This is specifically we had created a lot of content and like in the introductory speech of Yash, what he mentioned about the introducing our own YouTube channel and then putting up a lot of our own content. So similar to that, this is something new creation and wherein we are building inventory of huge content library, basically the vectors and images. So that images and vector library is itself like it's a huge, but at the moment whatever we have invested in that is what we have segregated separately, and we have shown it as our stock in trade. Basically that consists of we purchased license right also from one of the broadcaster, and which is over the period of 15 years. So we cannot keep that investment into the prepaid expenses. From the accounting standard point of view, that doesn't look good, and that is not as per the policy. So we have to consider that as a stock in our books, and so that's clearly segregated from the project inventory. So this is the 3 crore is mainly for the license right, which we have created a stock and which we can be monetized over the next, whatever, 10, 15 years or maybe in a year or two. Until now, we have not monetized anything. This was just purchased last year only. So that's an investment of 3 crore. The other, another 3 crore is basically, as I mentioned, about the images and vector, which we have been creating as our own IPs, and that's a separate product which we'll be delivering or launching soon. So this is for that. So that's the 9 crore is majorly on account of the stock which we have created.
Okay, understood. Thanks for the elaborate answer. Another question is, I'm trying to compare this 6 months with the last year, March 2023 ending 6 months. We reported a revenue last year of about 35 crore and cost of production of about 15 crore. Okay. And this year, ending March 24, 6 months, we reported 9 crore revenue and cost of production of 10 crore. So, okay, for 35 crore revenue, we have cost of production of 15 crore, and 9 crore revenue, we have cost of production of 10 crore. There seems to be a disparity in this.
Yeah. So basically, we have to always consider the change in inventory as well. That's also another stuff. And as I mentioned, like this year, particularly this half, the last 6 months was mainly our investment went into this into the creating the content. So if you take the total of work in progress, change in work in progress and the cost of production, which comes to 5 crores. So basically, the remaining expenses which we have already addressed, that we have created the inventory of another 7 crores during this last 6 months only. So that's the major change. So if you just look at that, the revenue versus cost, it's almost 50%, the 60%.
Okay, understood. One last question to Yashji. So I understand that we have some recent developments of getting some new contracts, and as we are under NDA, we are unable to announce the names and size of achievements. And we also took up this new initiative of launching Freshmint, which looks very appealing with the name. So looking at all these developments in FY25, what is the growth we can expect?
See, the content that we have multiple projects from some really large size OTT platforms and broadcasters, and the Freshmint as a new vertical for us. The numbers, I will not be able to comment on the numbers, but the year is looking exceptionally good for us. And
will we be able to cross the earlier FY23 number at least? Will we be able to go back to above 50 levels this year?
We are going to do exceptionally well. This is with the confirmed business in hand that we have. On the basis of that, I'm mentioning. As far as you asked about Freshmint. See, Freshmint is a very exciting vertical for us, where we are not only creating original IPs, which will be...
Sorry, we lost your audio
Hello.
Yeah, go ahead.
Can you hear me now?
Yes, yes.
Yeah. So Fresh Mint, as a vertical, as a original IP vertical, we have already secured, interesting support from the brands. So Fresh Mint, we will be creating content which is going to be owned by us. The revenue streams not only restricting to earnings from YouTube, it is also there's a lot of revenue that is going to be generated from brands, advertisers, as well as licensing and distribution across India and worldwide. So, the year coming ahead is looking exciting for us. I'm sure all the stakeholders, shareholders will be happy to see the numbers when we reach there.
Thank you, and all the best for your new initiatives.
Thank you very much. Participants, you may press star and one to ask the question. Next question is from the line of Tara Kaur from C-Square Info Solutions. Please go ahead.
Yeah, thank you. My first question is that how does Fresh Mint plan to differentiate its content from competitors in the crowded streaming market, particularly in India region?
Thank you, Taraji. We have in the past we have done a lot of content apart from the generic content in drama, in romance. We have done a lot of content for youth. If you remember, we had a great show which was extremely successful on Channel G called Sadahak. So we did around 4 or 5 shows in the youth space. Currently, most of the platforms are very generic audience specific. There is not much competition in the audience target group of 15 to 25. That's a young audience. So what we target to, that's how we have named it Fresh Mint. So we will be creating content which are targeted at teens and young audience. There will be romance, there will be college stories, there will be, startups. So this content will differentiate definitely from the offerings that is available outside. And also here we are looking at producing multiple long forms. When I say long forms, most of the series that you see are 8 to 10 episodes. Here we are looking at creating multiple series of 25 episodes, which could go into 50 episodes or 100 episodes. So engagement level we'll be not only offering content to sample it, also we would like to keep engaged with the audience.
Okay. And so what are the KPI Fresh Mint will use to measure success its content across the various platforms?
The measurements of success is primarily on the views and how we reach out to various platforms. So it's primarily when you're talking about YouTube, it's purely on the basis of absolute viewership, how many people are watching how many episodes and how many videos, and of course in which platforms we are appearing on.
Okay. And can you please explain your licensing and relicensing business for most of your popular show, that you want to enter in?
So what we've done in the so we are not only the licensing is not only restricted to our own content. We also use the last 6-7 months to understand there is also a gap of licensing third party content. So we have what we have done in the past is in the last 6-7 months is we have acquired content from popular broadcasting platforms and licensed them to streaming platforms. They also picked up content from streaming platforms to license to broadcasting platforms. So those are the third-party content. As far as our own content is concerned, we will be, that is another commitment that we had made during our IPO. We'll be creating our own IPs and distributing content. We are in talks with some international distribution companies as well. So the distribution will be India as well as abroad across languages and formats.
Okay, sir. And so we understand that the industry is consolidated is halted, few projects affecting our revenue. So what is our outlook for the next year, that is FY25?
Fortunately, Taraji, the projects which were delayed are now have been given go ahead. So definitely the loss of last year is going to be benefit for this year. So we have not lost businesses. Yeah, certain businesses have been delayed, but they have started falling into our timeline in the immediate future.
Okay. And sir, when do we approach channel partner or OTT platform before the content is ready or after the content is ready?
So the content is divided into two parts. One is the scripting stage, where we create the world, the characters, the conflicts, and the stories. We understand, being in this industry for long enough time, our team has been working with across the platforms. So we understand the need of the content. So we develop content, then we approach the platforms. Once they greenlit, then we start investing in the production.
Okay, sir. Thank you. And my last question is that when will the freshman get live?
Taraji, very soon. We will have announcement very, very soon. And we're excited. We want reactions from you and all our stakeholders and audience. So we are very excited about it. The announcement will be very, very soon.
So when you say very soon, could you just give me a tentative, just like a few months or?
No, I'm not sure whether I'm allowed also the compliance, whether I can put a number, but very soon are generally not long terms, but very soon are generally when somebody happens in a month or two, that is very soon.
Okay, sir. All the best. Thank you so much.
Thank you, Taraji. Thanks a lot.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Jainam Shah from Swapnil Associates. Please go ahead.
Hello, management. Thanks for the opportunity. So my question is like, how can one investor expect, Inspire Film to be different from other successful existing shows for new projects in television and OTT platforms?
Hi, Janamji. We have always tried to stay away from the regular content. If you have seen some of our past content, we have tried always to deliver fresh content, create new trends rather than following trends. As a television concern, whether you have seen Kuch Rang Pyar Ke Se Bhi or Ishq Mein Majawa, Sada Haq, Ek Beat Kya Tasveeran, Jana Na Dil Se Dur, $1 Million Girl, they all have been innovative and fresh content, fresh characters that we have offered. Similarly, on the OTT platforms, there are two kinds of space where we are approaching. One is our long forms, which are more than 25 episodes or 30 episodes, 50 episodes, and short forms. There are some exciting content which are we have some really exciting content which are differentiator in the OTT space that is coming. We have got some exciting book rights which are now converting into content. In the past, we have done one. We had acquired a book called Write Me Love Story, which was produced for Hotstar called Dear Ishq, which did extremely well for the platform. Similarly, we have a few projects. So right now, as we have mentioned, one project that we're doing for the international platform that is also based on a popular novel by one of the leading novelists in this country. Content which are based on novels, content based on real life stories, real life events from the history. So differentiating content is always going to be our focus and strive.
Okay. So, our company will be taking any measures to maintain and enhance its competitive edge?
We have a very strong content team, in-house content team. I think we are one of the first companies to actually set up a writer's room way back in 2012 when we started our operation. So our research is extremely, we go deep into, we depend a lot on insights. So apart from gut feeling, I think insights is something that happens. So we pick up the need of the audience and the gap that is available, and we approach that. So that will continue to give us the edge over the others.
Okay, great. So, sir, can you please tell us, what's your long-term vision and expansion plans for new markets or platforms, and how company will plan to navigate potential challenges and capitalize on emerging opportunities?
Number one, we have, apart from our own pipeline, we have started our first approach by, we understand there's a need for consolidation. So what we have also started, first getting a Kavya Pictures with us on a exclusive arrangement for next 3 years. So whatever content they will be producing will be produced under Inspire Films. Similarly, we will look at more upcoming and promising content companies who will work with us to expand the bandwidth and also the revenues for us. That is one. Number two, unlike most of our competition, we are expanding both in television and OTTs. Apart from television OTT, also original content which are going to be licensable. The beauty of original content is you amortize the cost, you recover the cost in the first 1 year, maximum 2 years. But post that, you continue to get license fees, which are 100% adds to your PAT. So there are three different aspects that we are focusing on.
Okay, great, sir. So, sir, I've heard about your new upcoming Fresh Mint. So, in what ways Fresh Mint intend to expand its revenue streams beyond YouTube monetization, and how sustainable are these additional streams in the long-term vision?
The Indian content right now, if you look at, has a lot of takers outside India. There are more than 60 countries where Indian content is delivered. And particularly looking at the stoppage in supply from countries like Turkey, which has been a leader in content syndication in the world. Indian content are right now awaited. So content that we produce under Fresh Mint will be, apart from being monetized through YouTube, we will also be looking at international licensing. Whereas in YouTube, in some of our projects, we will be geo-locking them. So the Indian content our content is not available on YouTube outside India. Hence, the local players outside India can avail and help us monetize.
Okay. Sir, will there any strategies for Fresh Mint to attract and retain brand partnership and sponsorship from its content?
Yes, that is one of the key areas of our revenue. So sponsorship and brand partnership is important, and that is a very key revenue stream for us. As we are talking, we have already got as I mentioned, we have already got a brand partnership for our first project, which covers almost 80% of our investment.
Okay, thank you. And I'm waiting for a Fresh Mint to go live soon. Thank you for answering my question.
Thank you. Thanks, Arjun. Thank you.
Thank you very much. Participants, you may press star and one to ask a question. Next question is from the line of Deepika Chadda and HNI. Please go ahead.
Thank you. Hello, sir. I had few questions. Firstly, which is the most profitable vertical among the three?
See, Deepika, television will continue to be a large segment because of the sheer size of this industry. And it will be followed by OTTs. OTTs, again, some of the projects are also very large size projects that we are developing currently. However, the original IPs are, in the long run, they add value and they add profitability after a couple of years, because once you recover the investment, they will continue paying you for licenses. The way music or film industry works, once a movie recovers its initial investment, the licensing continues forever.
Okay. And which major OTT channels are we working with?
We have been working with OTTs like Jio Cinema, Sony Live, Hotstar, and now there are two more added to that. But see, the problem is we cannot take the names unless they announce it. So we are signed and bound by NDA with most of the platforms. But yeah, I think I can safely tell you that almost 80% of the top OTT platforms we are working with.
Okay, great. And last question is, because of the industry turbulence and delays, how do you maintain investor confidence, and what steps were taken to reassure during uncertain times?
See, it was something that was not expected ever. The last couple of years, where, there was. But I think if you look at a longer run, mergers are always exciting on the long term for the industry. There's more power, more money that comes into the industry, more content is needed. The audience size is increasing dramatically. Post-pandemic, there's been a huge thrust on consumption of content in India. So we have innovated this time instead of sitting back, despite knowing that there's a delay. So innovation happened in terms of licensing and distribution and redistribution, and that also allowed us time to start working on refreshment. So the combination of creation of original content as well as licensing. Licensing will be used more when there's a downtime. We can always push our gear and get more business through licensing. When the production goes down, the consumption doesn't go down. Consumption is only growing. If in future there is any such situation, our licensing and distribution will help us manage the balance.
Correct. Thank you, sir.
Thank you, Dikaj.
Thank you very much. Participants, you may press star and 1 to ask the question. Next question is from the line of Mansi Verma from Gajanan Real Estate. Please go ahead.
Yeah, good afternoon, sir.
Hi, Mansi. Good afternoon.
Sir, my question is on which vertical do you think company will be focusing in future for the future growth of the business?
Mansi, as I said, I cannot differentiate between three of our kids. So television is a traditional media and will continue producing television content because that gives us a lot of reach. We reach out to more than 250 million people every day through television. So that is going to be a very important part of us. However, going forward, OTTs, because OTTs are growing, and if you look at the CAGR of OTT, it's close to 28% CAGR, which is phenomenal. So OTT is a business for future, and where you can tell stories which cannot be told in television. So large scale, large canvas stories you can tell. Whereas original IPs are going to be the asset-based vertical. So we'll have a combination of all three. There will be, of course, the original IPs will be very close to heart because creating content and you're retaining them.
Yeah, okay. So as you said, the market is growing, sir. So how the company adapts the content creation and so that company can be in the competition, how the distribution strategies you change with the evolving trends?
So we study the market changes very closely, and because our team, all of us here, we are been here for long enough time to understand the market dynamics and the changes. We anticipate what is going to the next phase that is going to happen. So the knowledge and the network helps us, plan things better. The strategy will always depend on what are the upcoming trends that is going to come. So considering that, we have been working on across all our verticals.
Yeah, okay. Okay, sir. Thank you for answering.
Thank you, Mansi.
Thank you. Next question is from the line of Yashwanti from Cogent Finvest. Please go ahead.
So I just wanted to understand, what is the revenue contribution from the three vertical which we have, like TV, OTT, and original content in FY24, and how the focus is going to be changed, or the contribution to the overall revenue is going to change?
See, currently we have, because all of them they put under one broader business purview. So I will not be able to put a number right now, but so far television and OTT have been equally strong. Whereas original content is licensing is going to be around 10 to 12% or maybe 15%. Whereas television and OTT will remain around 35 to 40% each. Original content is now getting into the system. It will kick in now. So I think going forward, television and OTT will be around 50 to 60%, and the rest will be divided between original content and licensing.
Original content
And licensing.
Licensing. And then going forward, like when we also publish upon this freshman channel, so just wanted to understand what was the expenses incurred in launching this channel, and the proposed launch on this channel, and what kind of a revenue we can see from this, considering whatever the existing channels we will be competing with them. So what kind of a expectation you have for them?
So it's an ongoing process, will evolve with time. There is an initial investment to establish the platform, reach out to more audience through collaboration, through participation, through influencers marketing, through innovative content marketing, various content and small events with participation in colleges and institutions. Content-wise, the first it all again depends how many episodes one is making the content for. They're not very high cost content, but they're very high impact content. At the end of the day, the audience that we are catering to, they are looking at good characters, good content, which are innovative and more engaging. So it will vary from project to project. We'll see the appetite as we keep going and how the audience reacts to it. So accordingly, we'll invest.
No, thanks, sir, and all the best.
Thank you. Thanks a lot.
Thank you. Next question is from the line of Pratik Deria, individual investor. Please go ahead.
Hello. Am I audible?
Yeah.
Okay, thanks. So thanks for the opportunity. I think my question is more to do with content. So firstly, I'm very new to your company, and I wanted to understand how is the content world evolving?
Very interesting question. I didn't expect it from this call, but I'm happy to answer this. Pratikji, the content is definitely evolving. Whether it's a cinema, whether it's television or OTT. That's how you have seen a change where more realistic content are now appealing. The content has to have, it's not your heroism content, it's more realistic content which touches, like if you see a film like a 12th Fail, why it did so well, or when you say Kantara, why it did so well. I think in terms of OTTs also you see a lot of new age content coming across platforms. Television has been more dependent on traditional narratives. Because the change in television takes time because the base is so big. As we know, we call television shows soaps because they help selling soaps. So FMCG driven, it's advertisement driven. So the mass base, the large audience don't change overnight. But as far as OTT contents are concerned, OTTs are very sensitive. It's like your Sensex. People are exposed to more content. They are ready to experiment. Unlike television, which is a stationary device where family watches one content, OTT content people watch on their devices. More than 70% of the people, they consume OTT content on their personal devices, mostly in the mobile, surprisingly. Mobile is one of the biggest device for consumption of OTT content. So, more realistic content, more character-driven content, new conflicts, and innovation in the narrative are the key for content going forward. Hope I have answered your question.
Yes. Yeah. Okay. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, that will be the last question for today. I'll now hand the conference over to Ms. Chandni Chande for closing comments.
Thank you. Thank you everyone for joining the conference call of Inspire Films Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining the conference.
Thank you very much. On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.